Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Lewis Berg. So today what we're going to do is I'm going to give you an overview of the market, so a market update. We're going to see where sector rotation and industry rotation is happening. So where is the accumulation or the demand happening within the stocks, so the sectors and the industries. And then I'm going to go over a couple of charts, and then we're going to, I got a little treat today for you, so I'm going to kind of display some of my ratios and let you know exactly what's happening with those. So before we get a jump here, let me thank you for subscribing to TSE and supporting TSE and my channel here and me. If you haven't already subscribed, please do. You can click on the TSE logo on the bottom right hand corner of this video. Also like the video and leave a comment. If you have any questions, I'll be more than happy to help you. Again, thank you for your support. So this video is for educational purposes only. Do your due diligence before venturing off into stocks. It's your duty to take responsibility for your own actions, okay? So nothing in here is a recommendation. I'm not a financial advisor or broker, so I'm not recommending these stocks. I'm not promoting them, okay? So let's go ahead and get a move on. What we're going to start off with is we're going to start off with the Dow Jones Industrial Average. We're going to go over see what's happening within the market indices themselves. So what we have is we still have a nice uptrend here. We're holding the 20-day moving average today. So if it does close below that, expect it to get down to this 50-day moving average. So we're going to look at about 33,972. Of course, it closed in the red today, but we'll see if it can balance itself out. If it does touch that 50-day moving average, hopefully, if it does, it can move back up. If not, it cracks, it can close below that 50-day. Expect it down to this 150-day moving average, okay, to around 32,140. If anything, it'll get, it could possibly get down to this low right here at 33,500. You can maybe expect that to happen. We don't know for sure, but hopefully, if it does come back, we want it to see that it cracked that $34,800 level, okay? So let's go look at the S&P 500. I know the S&P 500 had a decent day. It made a new all-time high today, which is good. I mean, not great accumulation, but matter of fact, to let you know right now, we did have a mediocre accumulation day, so there was more buying in stocks than there was selling. So that was good. That's good to always see, but it was mild. So other than that, if we can keep pushing, we'll keep making new highs this week. But other than that, if it does decide to turn around, we'll probably go down this 20-day moving average to about 4,197, okay? So other than that, the uptrend in this remains intact, and we're still moving up, okay? So other than that, let's go look at the NASDAQ. I know the NASDAQ had a good day too as well. It's pushing towards all-time highs right here. If it can crack that $211.57 level, we're reaching new all-time highs. That's good. It's good for growth stocks. So I know that there's been a lot of base building going on within some of these stocks, and they look pretty ripe, ready. You know, I named a few today on mine, like SITM, Lazy, LAZY, and Futu, FUTU. Those are looking really good right now. I know Lazy didn't have a great finish today, but it is what it is. But I can tell you right now, Futu's looking good, and so is SITM. Just trade cautiously right now into this week because the all-time highs list is staying steady. That's good to see, but according to my pressure uptrend pressure ratio, we did increase today, so that's not good. It's telling us that there is some pressure on this uptrend right here, as we still are at inflection points within the markets, okay? Just be safe, you know, take your trades accordingly to risk management, position size, okay, respect risk, okay? So Just trade cautiously, is like I said here at this point. So let's go look at the S&P 600 small caps, Bradley Russell 2000. We did have a not a good day today, but we didn't crack this low right here at 1,381. So we kept above that, but we might not tomorrow. We might get down to that 20-day moving average. If it does close below that 20-day moving average, you expect it to get to that 50-day moving average at around 1,353. So just be careful right now where you're trading, where you're swimming at. Small caps are a little dangerous right now, but they're still holding. They're still holding decently. I'd like for it to hold right here and just move back up, but don't know. We never know. You know, hopefully it'll get. Maybe by the end of the week we'll get up to that $1,417 level right there and crack it and move into new highs with that one. Okay. Not for sure, but we'll see what happens. Okay, so we take the trading day by day. Okay, it's just we trade in the present and we study the past for knowledge and follow the process of trading to build our future. Okay, this is what we're about. That's how we do that. So let's go look at the volatility index. Of course, I mentioned, you know, we made a double, kind of a double bottom right here, just a really intraday short-term double bottom right here at $15.15. Of course, it came rising up 4.73%, or to close the day at 4.73%. So there may be a little volatility entering in this market here soon. Don't know, but just be cautious. Like I said, volatility is not necessarily our friend. It giveth and it taketh, and it can take it really quick. So just be cautious. Another thing that showed up is that we do have high volume, and that is a decent indication that we do have volatility coming into this market at this point, at these inflection points right here. So as the Nasdaq's making new highs, just be cautious trading. Okay, that's all it is. That's all it comes down to. Let's see here. So let's go over the sector rotation, where we have some money pouring into. We do have some utilities coming into play here. Nothing fantastic, not like what I've seen before, like in 2018, but they're starting to come back a little bit, so people are getting a little cautious here. We do have technology still being a beast, still rotation into this sector. Some rotation, a little bit of rotation in real estate. There was rotation into industrials today. Healthcare still remains the strongest as well. So technology and healthcare are the two best, and then financials as well. There's been some rotation in the financials. Other than that, that's where you want to be swimming in. Try to stay within those boundaries. So technology and healthcare for now, until we start really getting until those start to decrease. Okay, so industry wise, we've got some telecom equipment happening within technology. Software remains a beast, just like I said last week. Going into this week, you want to be looking at software, technology, software, healthcare, pharmaceuticals, and biotech. Okay, we do have some give to semiconductors. That's good to see. Also pharmaceuticals still okay, and let's see here what else we have. A little bit of internet here, that's a little interesting. Let's see here. So let's see. So biotech's excellent, looking great right here. A little bit of banks, some asset managers. So those are what you want to be swimming in. Okay. So other than that, let's go on. I'm gonna go over a couple of charts here. FINV, Finvolution. I've liked this stock. I've watched this stock for a long time. I watched it come out of this base right here, coming out of this stage 1 right here, and really got an interest in this one right here at about 380 or so, but I didn't trade it, but I just watched it. But this is forming a really nice rounding bottom, or a cup with handle right here, however you want to look at it, or you can say a double bottom right there, whatever. But I can tell you right now, volume's coming in. It's been pretty strong. Volume dry up within the base. We are in a really nice stage 2 development here. It is surpassing the high of this little handle right here, this upward handle. Or wedge, however you want to see it, or an ascending triangle. It is surpassing that $9.14, closed above it, so it's really good on demand. This is a high alpha stock right here, and this could possibly reach into new highs, so it could get into $10.35 or to the 52-week highs at least. So let's go look at another one that like HIMX, the HIMX Technologies. This is semiconductors here. This one had a huge day, really good volume, excellent volume. So there's lots of demand, high alpha stock right here. This is the relative performance line, so it's comparing to the S&P 500 and the NASDAQ, so to its component parts here. This stock is in a nice base right here. You can practically say, so first base right here, kind of second base, and so maybe a third base right here, with kind of a rounding bottom, or just a if you want to say, you can say kind of a descending triangle. So be careful when trading descending triangles, because it can come back and touch this trend line here, where it's making this trend from high, from a higher high to a lower high, boom, 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 passing somewhere around here at the $13.50 mark, $13 level. But the volume is good, and not only that, it made a high of $15.98. So what it did was it actually got past a lot. It actually moved past a lot of supply right here. Okay, you still do have a little supply to contend with right here, moving into the 1650 range. Other than that, maybe we can get up to new highs, or 52-week highs at 1788, but this stock is looking really good as well. So another one, HMLP. Let's go look at this one. This one made a really nice cup with handle right here, the handle being right here, although there is a mini cup with handle right with the larger cup and handle. And we are surpassing, we do have a volume increase right here, good price action as well. This is more of your early base, so more of like a secondary base right here, maybe a double bottom with handle, however you want to see it. But the relative strength is okay, not bad, but there is high demand within this base right here, and there still is high demand within the base. So, and of course, breakout of the handle, we are increasing quite a bit. So this is a marine transportation. It is in the industrials here. So also OSS, I took this trade, matter of fact, today. I bought this stock in around $6.35. $6.35. It's breaking out of my super pivot. This is a really nice double bottom right here, and we do have this nice contractional period in price, or contractional price in let's see, about 17 days. So, and of course it from high to low was only 17%, with the contraction coming in at around 13%, and then a little bit at around 7%. So this is kind of like Mark Minervini's VCP characteristics of what you're looking for, which stands for volatility contraction, okay, pattern. So it's just a characteristic of the pattern that you're looking at, okay. So, but this is a nice base right here, rounding, putting in work, good volume coming out right here, nice volume dry up right here. So, and volume coming out today. So we'll see what happens with this stock. I also bought SI-Time as well. I'm a little nervous about this stock, but it did close very nice. I bought it around $119. So we are getting through a lot of supply right here. The only thing is, we did have this gap down right here, this day right here. So I don't like to see gaps like that, but it's pretty strong. So not only that, the fundamentals are insane. So other than that, there's several other stocks that we can go over. I'll put them out on the YouTube channel. You'll get to see those in the description. So just look at those for now. So let me go ahead and just back out of this real quick. And what we're going to do is I'm going to give you this treat. These are my ratios. These are only a few of my ratios. I have several other ratios that are in development, But this one in particular is the trend ratio. So as you can see, the market was entering into a pretty rough time. I mean, especially in NASDAQ. Dow Jones was excellent, of course, but the NASDAQ with growth stocks started getting a little volatile, and a lot of downtrends happening and everything. But now we're starting to come out right here and break this 13.54 level. So we want to see that. We ended the week last week at 13.88. So the trends are starting to come back. We're having more uptrends. So all this is just a measurement of uptrends versus downtrends. Okay. The other one that we have is the Uptrend Pressure Ratio. We started increasing at the end of last week. We started increasing on the uptrend ratio or the uptrend pressure, and today we had a little bit more of an increase in the uptrend pressure. So all this is just a measurement. I take a measurement that's based on statistics, a mathematical model that lets me know what practically the inverse of what's going on with the uptrend. Okay, and with an uptrend you want to see buying, you don't want to see selling, and so that's all that's measuring is what's going against the wave. Okay, or what's going against the current, if price is going against the current itself within the stocks. So other than that, we did have an increase, but we are also having an increase in the downtrend pressure. So more stocks are showing that are in a downtrend are showing pressure on their downtrend and are increasing in price. So that's okay to see, but I just don't want to see the uptrend pressure ratio really start to increase like back in around 514, 5.7 to 514. We don't want to see that, but maybe we're done, and maybe the uptrend will alleviate, and we'll get something around the lines of like this right here. So other than that, let's move on to the activity. This is high-low volume. This is the high-low volume ratio or activity ratio. We did have a decrease in the high volume, or in volume. Let me put it that way. We've had a pretty mellow on volume. So other than that, usually when you see volume start to increase, you know that we're going to get a little volatile. So the volatility will pick up. Other than that, today we did have a larger than normal, or let me put it this way, than last week, larger than last week volume, high volume. So volatility may be picking up in this case right here. We'll see what happens as the week goes on. And practically all this is, the activity ratio is just a measurement of volume compared to high to low as to what my version is, as to how I come up with it mathematically. Okay, so other than that, this is the Minervini uptrend ratio, and if you know anything about Mark Minervini, Mr. Minervini has his own trend template, and in that template you want to see the 200-day moving average rising at a certain rate or a certain percentage as the stock is moving up. So all this is just measuring is that increase, okay, with a large uptrend, okay, with a major uptrend. So all moving averages, the shorter term moving averages being above one another, with the 200-day moving average increasing at a particular percent change each day. Okay, and that's all that's about. And you can see that as we move up, we have more stocks increasing their uptrend, increasing that 200-day moving average. So as long as we're moving upwards, that means that those moving averages, or that 200-day moving average, is increasing as well. So that's good to see. Other than that, that's what we look for with that. So the trends are increasing. That's good. The uptrends are. That's what we want to see. That's good news. Other than that, this is the weekly average close up down ratio based on my mathematical model of volume and price change. Okay, so I take this on a weekly basis, and I just average out all the numbers that I get, my calculations that I get every week from my scans, and this is the end of the week. So this is increasing. That's good to know. So we do have more up days, or let me put it this way, higher volume and up days in the market on a weekly basis. So it is increasing, so it is showing you that we do have accumulation. As you can see, when this ratio gets down to like 0.56, 0.49, 0.32, you can see that's kind of like a point where you want to start getting bullish. You want to say, look, the market could have a possibility of turning, like at 0.8 right here and 0.7. The market started to turn, and if you've been trading here the past few weeks, and if you're trading properly and trading specifically and taking your breakouts, you're doing okay as long as you're following high demand. Okay, so that's what you want to look for, is volume. Volume is the key in the market, except for price action. Price action is the king, but volume is what fuels price action, so you need to be following that, because it's going to tell you where institutions are putting their money, where rotation's happening. Okay, so and that's what's going on right here. So as we're increasing, we know that the market's okay right here. We are getting an increase, so we are having accumulation happening on a weekly basis. Same thing with this Friday close up down. I believe Fridays are very important, just due to the fact that the weekends you can have the weekends people get really kind of scared on a Friday. If they get scared on a Friday, they take their money out. So money managers are taking their money out, institutions are taking their money out of stocks, and so or increasing their positions in stocks. Okay, so that to me is actually important. Not only that, and you also have overseas trading as well. So it's very important with a Friday close up down ratio. If you can see right back here, this was important back before the crash there. We were showing some very negative readings right here, and as long as you follow that right there between about that 0.5 level and below, or even 0.6 level and below, once it gets to about that range down there, then you know that it's you can start getting bullish as well. This is just a really very short term ratio. It's just kind of giving you an idea what's going to happen within the week, within the following week or two. So as well with the weekly close up down ratio, practically this ratio is calculated the same as the weekly, except this one's just based on the Friday close. Okay, so other than that, this one has decreased last week, but it may even decrease. Sorry about that. It may even decrease coming into this week. Don't know. We'll see what happens. We'll pay close attention and just trade accordingly. Keep yourself safe. Okay, manage your risk properly and position size accordingly to it. So other than that, I want to thank you for watching this video, and I hope you enjoyed it. I hope you found the information enjoyable, and you gained some from this. I hope you find my ratios interesting as well. So other than that, thank you for watching and supporting TSE, and drop a comment, leave a comment, like the video, whatever. If you have any questions, I'll be more than happy to help as well. So other than that, I want to thank you again for watching. And here at TSE, we trade in the present, then we study the past for knowledge and follow the process of trading to build our future. Okay, so thank you again for watching and subscribing. So other than that, opportunities awaits, my friends. Take care.